Hi everyone, I'm Jessica Morales. Thank you for joining us for Oil and Gas Investor Headlines. We start off with A&D news this week. Chevron is selling 64,500 net acres in the Central Basin Platform and Northern Shelf of West Texas. That's about 5% of its total Permian Basin holdings. While terms of the transaction between Chevron and private equity-backed E&P Parsley Energy weren't disclosed, analysts estimated the deal is worth roughly $400 million. Recently, Chevron announced it wants to sell up to 200,000 acres in the Delaware and Midland basins. Also in the Permian Basin, Parsley Energy started off the month by adding 5,600 premium net acres in the basin that could have a value of roughly $200 million. The company made the acquisitions through trades. The company isn't alone. Other companies are making smaller scale transactions in the Permian as well. And you can follow the latest deals on oilandgasinvestor.com. EIA forecasted earlier this week U.S. crude oil production will reach a record high in 2018 despite Hurricane Harvey's impact on the industry. The agency says U.S. crude oil production will grow in the remaining months of this year and reach its highest ever annual average next year. EIA also said that while refinery output declined by 3.1 million barrels per day to an average of 14.8 million barrels per day, during the week of September 1st, that reduction would be balanced by a decline in petroleum product net exports. Meanwhile, OPEC forecasted higher demand for its oil in 2018 and pointed to signs of a tighter global market, indicating its production-cutting deal with non-member countries is helping to tackle a supply glut that has weighed on prices. In a monthly report, OPEC said the world would need 32.83 million barrels per day of the organization's crude next year. That's up 410,000 barrels per day from its previous forecast. Finally, don't count out offshore just yet. Transocean CEO Jeremy Thigpen said this week at the Barclays Energy Power Conference in New York he can point to positive trends of a looming resurrection. He did so for starters by pointing out costs for deepwater projects have been chopped in half compared to about 2 years ago. He goes on to say break-evens for several major offshore developments have fallen from about $91 a barrel per day to $46. Thigpen also says floater contracting activity has steadily improved since the second quarter of 2016. Still, the road to recovery could be a challenging one for the offshore drilling industry as the oil and gas industry settles into the lower for longer environment. You can read more about this outlook on epmag.com. Thank you for watching this week's edition of Oil and Gas Investor Headlines. Next week, we'll be coming to you from Doug Mincotinent in Oklahoma City. We hope to see you there. I'm Jessica Morales.
To stay up to date on the most recent Hart Energy videos, subscribe to our YouTube channel by clicking here.